All right, so let's talk about financial stability here. I think the main thing is you're not solely reliant on your business anymore.
You, I like to think that this is where it starts changing from need to get to. It's not completely there, but you don't necessarily need to make decisions that you once had to in order to extract a heap of money out of the business.
So less grindy.
It's totally less. It is, you have options now. Like the investments are pushing out cash flow, or they're doing whatever is, again, your investment type. But you have this stability where you still need to do work in the business or whatever in order for you to pay for your lifestyle, do the things, but you just have choices because you've got this engine that's sitting behind you, compounding and spitting out cash flow, etc.
Would you say this is the point where you're maybe halfway on the way to being financially independent? So maybe you need, I don't know, $5 million worth of assets and 250 grand a year of cash flow to be financially independent, right? If you're at half of that, so you're 2.5 mil, 100 grand a year in passive, may not cover your expenses after tax, noting that is a topic for another day. Is that what you would say? Look, I'm financially comfortable here.
Yeah. So for a financially comfortable, to use that exact expression, I think halfway would be financially comfortable. But I think that the stability comes through each stage. So if you were to think about breaking it down, it's like, well, can I pay all my bills? I remember when I felt this, I'm like, can my investment properties just pay my bills? All of them, like internet, electricity, water, etc. It's like, yeah, I can. And I'm like, ooh, for the rest of my life, I don't need to pay bills anymore. Right. And so that brings in this level of stability. The next one is, well, can the investments pay for the rent/mortgage? Oh, now, like, and the bills, obviously. So it's compounding on top of it. Oh, now I feel even more relaxed. Then can it pay for like school fees? Can it pay for maybe food? Could be one. So I see that the stability is almost like, yeah, you build these like little blocks of going, maybe there's 5 blocks of like utilities. Then you've got like your rent and mortgage. Then you've got like your food bill. Then you've got that school and stuff. And then it's like building towards the roof component, which is complete financial independence. Right. And so the stability continues to come until you get to obviously the next stage, which is 5.
The key for me in this stage here is that if you've been going way too hard in business, which was me, by the way, I was like grinding hard, doing too many hours, health, family, friends, and everything had been completely neglected. This is the point to start winding a little bit of that back and getting some lifestyle back so that you can actually not just be stable, but sustainable.
And present.
Completely. Because let's say the financial independence journey as a whole is 5 years. I think 5 years is a tall order for anyone to just work their face off wholeheartedly.
Totally. Especially because a lot of people, like, you'll breach your 30s in this journey, right? Because you're still trying to figure yourself out. And like, then you're getting into the family stage, you're getting into buying, like, it is, you're like, for people just to continue pushing hard forever, it's just tough. It just doesn't exist.
Do you think there's also merit in some people going, do you know what, I'm going to slow down a lot more here. I acknowledge that, hey, it's going to take me substantially longer to be financially independent, but the lifestyle is worth it. I'm enjoying business. I don't want to feel the need to rush or the pressure.
Totally. So like for myself, so I look at it where the business is completely uncertain, where there are some other things that are more certain or stable. And so for the properties that I have and the buffers that I put in place for each property and the way that it spits out cash flow, I see it as significantly more stable from its previous results it has got. For me to actually go, I've got something more stable than the business, which means as I take the foot off the accelerator in the business and maybe live a little bit more lifestyle, maybe I spend a little bit more time with the family, the kids, etc. That then helps me become more into that financially independent mode where I'm operating based off what I want to do, not what I need to do to put food on the table and do the things.
I think another thing that comes from this stage as well is you're probably, coming back to buffers, going to probably want to increase your buffers in investing now, whether it's property investments or cash reserves if you're into shares or whatever it is. Like, you really have to acknowledge like cash is still going to be needed to create a more stable environment so you don't have to sell assets here as well.
Completely. Because again, you just don't want to wipe yourself out.
I like it. I almost feel like we should change the name of stage 4 from just financially stable to financially stable and sustainable.
I'm putting that in.
Put it in. I mean, we're not published yet. We still have time to change it.
I'm going to put comfortable in brackets. But totally. Because that sustainability is key. Like that, to use the phrase around like uncertainty and certainty, like that stability is, and the sustainability creates the stability.
All right. So someone's got some investments now. Buffers and everything is still good. They know what they're doing in investing, right? Financial stability, you'll know you've reached here when maybe you're a third of a way towards
you feel it.
You totally do feel it.
You do.
I know. But see, this is one of those things where it's like, they say, oh, money doesn't buy happiness. And people go, oh, that's fine for you to say. You've already done it.
Yeah.
Where it's like for someone that hasn't hit this yet to say, oh, you'll feel it, I feel is ambiguous. Where I want to give them a target where they're going
to. Totally. All right, give them a target.
I'm going to say it's somewhere between a third and a halfway towards financial independence.
Completely.
So if somewhere in that region, you're going to look up and say, it's not all on the business.
Yeah.
It's like, do you know what? It's like if I slow down a little bit, no one's going to die.
Yeah. If I'm not burning the midnight oil, it's not the end of the world. You know what? If something breaks and a client gets upset and they leave, okay. It's just this relax. It's almost like you had this tension and it just like starts to like relax a bit. And you just go, great, like I'm just not forced to do all these things anymore. Say no to that client that you didn't want to bring on. And you just see it in the way that you start coming into the business. Is like people say you're happier, you're more relaxed, you're more well thought, more well grounded. It's really interesting and a great spot that heaps of people should thoroughly
You can
enjoy.
stay here, right? If you just get here, like it's not, compared to the rest of society, this is not a horrible place to be.
It's definitely not.
And if let's say you're 35 when you get to this stage, right? And you go, do you know, if I slow down a little bit, it's going to take me 10 years to hit financial independence. 45 and financially independent is not a horrible position to be in either.
Especially if I'm enjoying the business and I only allocate the time that I want to allocate to the business, spend the time with the family. Sounds like a pretty darn good life to me.
It's also not what I did.
You went.
I'm going to reference that. Well, for those of you that are in a hurry, like I was, so now I've given people all the cop out in the world to just slow down at this point. Because honestly, I wish I did. I mean, I'm just going to say it. It was, for me, I didn't need to put my foot on the gas as hard after that stage, right? I could have slowed down a little bit and enjoyed life a little bit more. There was things I missed I can't get back.
Totally.
However, I did manage to do the 5-year run and become financially into that point. This is the stage for a lot of people where you will start getting a little bit comfortable and the temptation to be like, I deserve a car. Business has done well now.
I've worked so hard, I deserve that business class flight to go to Europe and do all the things.
The Rolly, the house upgrade.
I've got to show everybody that I made it there. Look out for the parade that comes down.
I will say this is where I excelled. I was willing to put off everything.
Yeah.
I didn't make any silly purchases at this point or become complacent in earnings. And like I honestly put my foot down at this point, and there was like months where I was banking 50 grand a month to push into it.
Let's go.
Absolutely. And it felt right for me at that time.
Yeah.
Because I was seeing that I was so close to the finish line. Let's just knock this thing over.
Yeah.
Hey, fellow business owner. If this topic and value-packed short video has resonated with you at all, and you want to dive deeper into creating wealth inside and outside your business, check out the full episode by clicking the link on your screen or in the description right now.